Welcome back, friends. Gold, the timeless symbol of wealth, security, and prosperity. For centuries, this precious metal has been the ultimate safe haven for investors across the globe. But what if I told you that everything you thought you knew about gold just got turned on its head? In a bold move, the recent budget announced a dramatic cut in gold import duty from a steep 15% to just 6%. The news sent shockwaves through the market, leaving investors reeling. Prices plummeted, portfolios shrank, and suddenly, the glitter of gold seemed to dim. Has gold truly lost its sheen? Or is there more to this story than meets the eye? Stay with us as we uncover the truth behind the numbers, the panic, and the potential that lies ahead. Imagine this: you've invested in gold, a decision based on years of trust in its value. But overnight, your investments take a hit, an 8% drop in domestic gold prices. Your gold ETFs and sovereign gold bonds, once safe and steady, may have lost 5 to 6% of their value. This unprecedented cut in import duty, the sharpest in over a decade, triggered a freefall in gold prices. Investors everywhere were left questioning their choices. Was this the beginning of the end for gold, or just a temporary setback? What should you do? To understand the full impact, we need to look back. For the past 12 years, the government steadily increased import duties on gold, pushing prices higher and making your investments more valuable. But with this sudden reversal, has the tide turned against you? For many, the fear was real. Investors in sovereign gold bonds felt particularly targeted. Why now? Why this drastic cut when prices had finally seemed stable? What could be the government's motives? Was this cut designed to hurt investors? Or was there a bigger picture we weren't seeing? After thorough analysis, it looks like this duty cut wasn't just about lowering prices. It was a strategic move, a response to the rising tide of gold smuggling into India. With high duties, illegal trade was booming, undermining the economy and distorting the market. The government needed to act, and fast. The official reduction in duty meant to curb this illegal trade, to bring back transparency and fairness to the market. But it came with a side effect, a sudden, sharp drop in the value of your investments. But before you rush to sell, consider this: the impact of the duty cut on gold prices, though significant, is only one piece of the puzzle. Gold, after all, isn't just another investment. It's a hedge, a safeguard against the unexpected. Even with the duty cut, the fundamentals that make gold a valuable asset remain strong. The factors that drive gold's value, like global economic uncertainty, inflation, and the strength of the dollar, haven't changed. Experts argue that the recent dip could be temporary. As global markets react to the ongoing geopolitical tensions and inflation fears, gold prices might just recover. In fact, if you hang on to your sovereign gold bonds until maturity, you could see those losses recouped, and then some. So, has gold lost its sheen? Not quite. While the recent duty cut has certainly shaken things up, the underlying value of gold as a portfolio diversifier and a store of value remains intact. The key takeaway: don't let short-term fluctuations dictate your long-term strategy. Whether gold prices rise or fall, the true value lies in understanding the market, the motives behind these moves, and how they fit into your broader financial plan. Gold has been a part of our lives for generations, through celebrations, traditions, and as a safeguard for the future. This duty cut is just another chapter in gold's long and storied history. The real question is, what will you do next? Perhaps the best move is not to act in haste, but to consider the bigger picture. Because in the world of gold, patience is often rewarded. This exploration of gold's journey after the duty cut was inspired by an insightful article written by Sanket Dhanorkar, published in the Economic Times Wealth Edition. We hope you learned something valuable and liked the video. Please like, share, and subscribe our channel if not already done. For a one-to-one discussion with a highly experienced finance professional who always keep your interest ahead of everything, you can write to us at info@eacapital.in. Until next time, stay happy, stay healthy, keep learning, and keep growing.